Alright, welcome back all you capitalist pigs. My name is Jason Stapleton, and this is the Forex Market Preview. I would like to welcome first and foremost all of you who will be attending tomorrow, the start of the International Trader Workshop. And what we're going to see here, the reason I included you guys in this is because I wanted you to kind of see a precursor of some of the stuff that we work on. If you're unfamiliar with this, as many of you will probably be, don't worry about it. We're going to cycle through this. But what the Forex Market Preview is it's a higher time frame, taking a look at the market, looking at harmonics, looking at structure analysis, looking at advanced pattern recognition, and I'm going to kind of take you through a wide swath of currency pairs here quickly, and just show you where I think the market is going, what I think you're going to see happen over the next week, over the next couple of weeks, and then give you my ideas of where I think the highest probability trades will be. Now, sometimes this is very good, and sometimes it's not so good. We have winning times and losing times, but again, that's trading, and that's one of the I think one of the most powerful aspects of this particular weekly series is that you get to see everything. You get to see the winners and the losers. You know, there's no disguising every week. If you continue to follow me, and now over 70,000 traders, of course, have received this this Forex market preview. Those 70,000 and the probably 40,000 active traders who are receiving this, who continue to watch it every week, for those 40,000, they get to see it all. And that's really, really important because you have to be able to see the winners and the losers whenever you're looking at stuff like this. So let me dive right in here. Now, I've got a lot I want to cover here for those of you who are one of the returning 40,000. Because we've got several pairs, and we're going to jump right into it with the euro. Euro, I talked last week before, about a Gartley pattern setting up here. And it looks like that is going to possibly complete here early part of this week. We had this support level here, the shelf here at 130.28, coming in support. Then we came back up into the resistance level. Again, we ID'd this last week. We talked about the trend line resistance that was coming in there. Market came right up in there, and when you find this confluence here, when you find this structure resistance, because you've got point here, and then you've got these lower highs that come in, that lower high that comes in right along trend line, right along that resistance level, is a high probability sell. And we actually did, I think, talk about, it was either syndicate members or the Forex Market Preview where I talked about a 2618 trade in here. And again, if you don't know 2618, don't worry about it. But what we're looking for here is a press back down into, I'm going to ID the level for you, right around 27.30, 27.25 is where we're going to be looking to get long this market. And if you look left, you can see those swing lows coming in there. That's your stop ID. Stops have to be below that swing low there. And we're going to look for the market to come into 127.23, and we're going to be looking for a buying opportunity for the market to rally back and go back the other direction. Now, this is a bullish Gartley in a bearish market. So again, this is a more aggressive trade when we talk about these pattern setups, because as the pattern occurs, we know the pattern is highly predictive in where the market's going to go. If we have a bullish Gartley pattern in a bullish market, that's even better. Right now we have a bearish Gartley right along structure support, but you can see, looking left here, you can see the support level here, looking back, the support level here. Look left, traders. Always look left. Structure leaves clues. And as you come looking left here, you can see the next real stop that we're going to run into is here. I mean, if the market gets under this support level right here at 2700s, we're really going to go test these lows. And as we collapse the chart up here on the daily chart, you can see that, guys, these are pretty serious lows. These were the spike lows from from 2010. Previously, the lows on this thing were back from 2008 after the market crash. So we penetrated the market lows, and what we thought was going to be major downside continuation, which is what all of the experts were predicting. We got a very nice rally out of this market. Now we've come back, we're testing this support level, and as you guys can see, I can draw this in. I don't really have the right tool here on the eSignal platform, but you can see just all this congestion in here, lots of opportunity. But it's not like it was back in back here in 2001, where the market was just like, it was buy and hold would have killed it in here. You know, buy and hold, buy and hold, buy and hold all the way up from 2001. And as we continue to go back here, you could have been a seller of every major rally in here and made very, very good money back in 95. But as we come forward, even all the way as early as as '05, all the way up to where the market crashed, you would have been making good money. Now, market's very choppy, very volatile. That's when these patterns, being able to identify the pattern formations, becomes so powerful, because while other people are just grinding it out and trying to figure out where the market's going and what's happening with it, what we're doing is we're identifying the pattern, and we're in a position to take advantage of that. So, very, very nice. Let's take a look over at pound dollar. Whoops. Let me blow it up here. Pound dollar just had an ABCD pattern completion. That's this move here. Boom, boom, boom. What we're looking at now is another equal distant retracement. See how this length of the move here is equal to this length of the move? Let me fatten all this up for you so you can see all this. This length of the move is equal to this length of the move. This length of the move is equal to now this length of the move. Now this retracement, this pullback here, 160.60s, looking left, if I consolidate my chart back up, you're going to see that's the high side of this previous structure resistance. Now it's not awesome structure because there's not like there's not a shelf like there is here at 159.62 where you've got resistance, resistance, all the way back, and then the support back here. But this is going to be in between 160.64 and 159.62 is going to be a good place to look to get long. This market has violated all of these highs. And if we get another equal distant move, which would be considered a 3 drives pattern, what you're going to look for, again, market's going to come right back up into resistance, resistance. So there's going to be a very nice, there's a lot of very good risk reward here if you wait for this market to turn up a little bit before you make your buying decision. And again, when we look at this, I tend to look on it at 2 different time frames. Those of you who are going to be at the workshop this week, we are going to look at mainly 2 different time frames with anything that we do. We have our higher time frame, which in this case would be our daily time frame, and then we have our trading time frame, or our one down time frame. In this case, we'd be looking at a 4-hour chart. So in this particular case, what we'd be doing is dropping down to our lower time frame to look for the potential buying opportunity. And then again, how we assign those rules can vary greatly, and there's a lot of different ways to do it right, and we'll be talking about some of those during the week. Let's bounce on over to pound yen. Pound yen's one we've been talking about for a while. Had a 26.18 trade here that paid really well. And what we're looking for now is a potential move. If I draw this in here, it doesn't look like it, down into 125.72. Now look left, structure leaves clues. Tiny little support level there, but look back here. Major resistance. Market tried to violate it 2 days in a row, couldn't do it, pulled back, and didn't get above it until here. So as we take a look at this, looking left, you can also see there has been a lot of frustration right around this 125.70s level. So as we're looking at this, market is back into a bullish trend here. We violated structure here to the left. That puts us bullish. If we come back down into this level, going to be looking for buying opportunities around 125.72. Now again, guys, if this is something that is, I don't know what I just did. Oh, hang on. There we go. If this is something that's new to you, or it's a little bit confusing and you're like, man, he's burning through this really fast, basically the more times you see this, repetition's the mother of skill. The more times you take a look at this, the more effective you will become at it. And just to give you an idea of that, all of the analysis that I'm showing now, I did in about 20 minutes. I run through, and one of the things you'll see very early, we're talking about on Tuesday when we talk about basic market structure, is these lines that you see in here that are on basically every single one of my charts. It doesn't really matter which one I pull up. You're going to see a series of lines on there. I'll pull up the Swissy. You'll see it there. Let me pull up one that I didn't find anything. Yeah, that one's not. I deleted all my lines off that. But any one of these, you're going to see a series of lines on these charts. What this is, guys, is this my way of keeping track. This is why I can cover so many different markets at the same time and not get lost and forget where I was and forget what I was looking at the last time I was there, is because I take notes. It's like when you're reading a book and you want to make sure that you remember something because it's a really pertinent piece of information and you know you're going to be 20 or 30 pages deep and you're not going to remember what page it was on. You take that highlighter out, you highlight the section, you dovetail the page, whatever it is that you do. We do the same thing here with our charts, but the way I do it is with lines. So for example, with New Zealand, I knew that I was watching this shelf because what we've had here is consolidation here, right here. Then the market breaks out and we break down, and then we get another level of consolidation here, okay? So we've got consolidation here, then consolidation here, and then bam, that market breaks out. So now I know what it is that I'm looking for. I was waiting for that break of structure, and now I'm IDing this 8067 level in order to sell. Now the reason I do that is because previous structure support or previous structure resistance often becomes support, and vice versa. So if we look back here, you can see, as I look right here, I'm going to open this up a little bit. You can see the resistance level that came in here. Okay, and if you ignore this line for a minute, just look at where that resistance level came in. Then the market pulled back, then we violated that resistance level. We had a higher high, higher close. Again, something else we'll be talking about over the course of the next week. Then the market pulls back. Previous structure resistance now becomes support, and we see support, support, and then the market takes off. Then we come back down. Previous structure support continues to be support. Then we rally. Now that's violated. The support level then is violated. The market comes back up, and we get resistance, resistance. Now again, this one breaks out. We get a false breakout, and then the market rolls over again. So as we take a look at this, you can even see right in here over the last move here where this market came in. We had this support level in here. Support, support, violated. Market finds new support. Resistance, 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 then we break out. And as you see this, guys, this is what I mean. This is learning the language of the market. This is why this is so critical to your success. I don't care whether you want to be a systems trader or whether you want to be a ratio trader, patterns, it doesn't matter. The important thing is that you be able to take a look at the chart and know what it is that you're seeing. This is what I talk about with being predictive in your analysis. And being able to take a look at a chart and instantly know what's the highest probability move. What is the market most likely to do now? And what I can tell you here on New Zealand is right now the market is most likely to rally. I'm going to pull up a basic study here. Relative Strength Index. I'm going to drop it down to a 7 period because that's the one I like. And I'm going to make the upper band 80 and the lower band 20. This gives me it requires a little bit more for me to have an overbought or an oversold condition. And that's basically what I'm looking at here for my RSI. So I'm looking for extreme overbought or oversold conditions. And as you guys can tell, right now we're down here around 14, well under 20, which means we're oversold. New Zealand, this market is oversold. And as I collapse my chart up again, what you're going to see is I drew two ratios in, and I will draw them in again so that you can see them. I'll just delete and delete. The first thing I took was this last leg of the move, this impulse leg that we had here, from swing low to swing high. And I can see that we're almost sitting at a 618 retracement. Almost there, and I can see resistance at the 618. You see how nicely those harmonics, or I'm sorry, that structure resistance plays into the ratios? How nicely that works? This is what we're looking for. We're looking for structure, ratio, harmonic confluence. And again, all stuff that will make a whole lot more sense if you're new over the course of the next week. The next thing I'm going to do is take swing high to swing low here of this last leg of the move so I can find out where my extensions will come in at. And I have a 1618 coming in at around a 618. I have ratio confluence at what will be previous structure resistance. So I would expect this market to dip a little bit down into 7790s, 7800s even. Something like that. You can be a buyer. I mean, if I would be a buyer right now, basically, because there's enough room in here where I don't really have to worry about it. What I'm looking for here is a turn back up into 8067. And when we come back up into really between 8067 and, if I draw this in, somewhere in here, 80.67 and 8100. Okay, that's where the market is likely to find some resistance. So we should see, market maybe come down here just a hair, rally back up into 80.67s, and then roll over and get some downside continuation of this move, because again, market has shown now that it has an intention to go lower. So if we get a relief, if we get an area where we can get short, we're going to. And you can play the counter trend play, which is a buy right here at 1618, 618 ratio confluence. There is there's definitely a play there as well, the oversold condition. So several different ways to take a look at this. You can wait for the retracement back up into 80.70s. You can play a buy here off the 1618. A lot of different things that you can do on this New Zealand, and it really just becomes a matter of you defining clearly what your rules are and how you're going to engage the market. What are you going to do? What are you not going to do? Because there are a million ways to do it right, but doing it right includes having a plan, knowing what you're going to do before you put your money at risk, knowing where you're going to take your profits, and knowing where your stops are going to go. So again, we'll talk about all of that over the next week. Let me see here. What else do we got? All right, we have a Swissy on the dollar Swissy. We actually have the completion of a Gartley pattern here. Okay, we've actually violated it. We've gone all the way through where the Gartley would have completed at 92.65, but we have not breached the highs here. So basically, we're in a position right now on the Swissy where you have the opportunity to sell at the open and get in at a better price than someone who was selling at the Gartley pattern completion, just selling limit orders there at 92.65. Stops, again, have to go above this spike high. More conservative traders, again, would drop down to a lower time frame, to a trading time frame, and look for the the rollover or continued harmonic ratio confluence there to make that sell. All right. That's about it, guys. I mean, that's a ton of stuff there in a very, very short period of time. We've been running a few minutes now, but I just wanted to give you guys a rough overview. There are a lot of harmonic stuff setting up right now. A lot of going to be very good trading opportunities into next week. We'll get to some of them. I'll show you guys as we move forward throughout the trading week some of this stuff that ends up popping up on the radar. This week is somewhat about training, or somewhat about trading, but more about training and kind of cleaning the slate off. And you guys are going to see on Monday basically my philosophy and what I believe is necessary in order for people to build successful businesses as traders. And if you're not doing that and you're not looking at your trading that way, you're really at a severe disadvantage, because all the major players in the market treat it like a business. They look at it as a business. It is a profit and loss balance sheet type of business. So we'll get to all of that on Monday, tomorrow. And if you haven't signed up yet, just go ahead and do so. Right underneath this video is the link to the sign-up page, and I got tons of free stuff there. A couple of training videos, pattern cheat sheet, some basically some beginner reports and guides for you guys who are doing things like looking for computers and interested in nomenclature and things like that. There's a ton of stuff in there for you. Leave me a message. Tell me what you think about the video. Tell me what I can be improving upon, what you liked, what you don't like, and I'll continue to try and make this, the very, very best free resource for you guys every single week. So until next time, guys, good luck and good trading. I'll talk to you soon.